Hey, welcome back, everybody. This is Carol Royce, and I am your host here, and I am so excited today to be in the studio with Joshua Cullum. Hello, Josh. How are you?
I'm doing well. How are you?
I'm doing well. And hey, listen, the weather's kind of changed. It's kind of pretty out there. We've got blue sky, puffy clouds, a little bit of winter. No, I wouldn't call it winter.
I mean, it's starting to feel a little more like the holidays.
It truly is. You know, we are extremely lucky because we have our favorite lender on the show today. And who would that be, Josh?
That would be Michelle Rule with Nexa Mortgage.
Oh, Josh, I know you love Michelle because she got you a great interest rate on your refinance.
She's the best. I've worked with her both, when I was buying my house, when I was refinancing my house, and then I've helped numerous other buyers out there in conjunction Michelle. So I love Michelle. She does amazing work. Her rates are phenomenal.
Well, hello there, Michelle. How are you today?
Hi, everybody.
Well, we are so glad to have you in studio today. Hey, Michelle, I just wanted to say that I was looking at the year-end data for our Arizona real estate market, and, the housing market just took off. It was hot, hot, hot. And, Josh, that's my favorite saying.
that it
hot,
is.
Hot, hot. And I think that part of that, Michelle, here, let me think. I think you can take that into several segments. Number one, Arizona is a very desirable place to live, correct?
Absolutely.
People are coming into our state from the Pacific Northwest all the way down to Southern California. They're flooding into Arizona, correct?
That's right.
And interest rates are so darn low that it's motivating people to come into our state, and instead of rent, they're buying.
That's right.
So the
market, rates are low, now's the time.
You are so absolutely true. So I was reading an article today, and Josh, this was an article across the U.S. It didn't specifically talk about Phoenix, Arizona, but it said that the affordability index is getting a little out of whack, meaning that prices are going up so fast, Josh and Michelle, that it's pricing buyers out of the market. Michelle, I will say that the equalizer in that is interest rates.
Absolutely. The rate makes you have more buying power.
The rate gives you that buying power. And what we have said so many times, Josh, and you've experienced this, is that your payment, if you're going to be financing, is more interest rate driven than necessarily purchase price driven.
Yeah, definitely. I mean, even just when I was doing my refinance, just getting that rate lower made such a huge impact in hundreds of dollars off my payment. So when it goes to buying a house, the lower your payment is, obviously, the lower your payment's going to be.
The lower the interest rate, the better suited your payment is, right, Michelle?
That's right. It'll help you qualify for more house.
Absolutely. And, I would just say that if you just took a $400,000 house, Michelle, and I'm just going to give some examples that are just that examples. It's not nothing that I did pen and paper. But if you took a $400,000 house at today's interest rate, which is it fair to say would be 3% or less?
Yeah.
Okay,
definitely
3% or less. Now, a $400,000 house, if that rate goes to 4% on a $400,000 house, now you're not looking at $400,000. Now you're looking closer to $350,000. It could mean a swing of $50,000.
Yeah, for sure. And probably a difference in $300 or more on the payment.
And a difference of $300 or more on the payment. So, Josh, you're buying $50,000 less house if the rate goes up, right? And your payment will go up by approximately $300. We say this to make a point. If you are in the market to buy a home, to refinance your home, upsize, downsize, the time to do that, Josh and Vikki, is today.
Absolutely.
It's now.
And I mean, I would say that when it comes to rates, obviously it goes based off of your credit. There's so many factors involved. But one thing I love about Michelle is, she can do your pre-qualification to find out where you stand. And if the rate or if your credit's not where it needs to be to secure a great rate, she'll work with you to make sure that happens. So she's very proactive in, telling you what is going on now with your credit and all of that good stuff, what the rates are doing. But we can also make a plan for you as well, or Michelle can rather.
And, Michelle,
Right.
you're doing that for several of our great clients now. Some of them have been furloughed for a while on their jobs, no fault of their own. Some of them have actually lost a job and found another job. And so I know that you're working with them to get them into a position where they can go out and buy a home.
That's right. And what we do is we just stay in constant communication with them, Carol, and follow up with them and making sure that they are doing what they're supposed to do, and then they can buy again. And they really do come back, and they really are able to buy again.
I just love that. Vikki, I just love that about Michelle. She is so committed to helping people that, she said those two magic words, stay in touch.
Absolutely.
That's right.
Michelle, driving into the show today, I received a phone call from a gal who I referred to you about a month ago. And she called me and she said, I've been renting for the last 10 years. I went through a divorce. I got out of homeownership. And I don't want to be a tenant any longer because I realize what I'm paying for rent is much more than what I would be buying in a home. And she said, our whole conversation was, I'm going to be calling Michelle this afternoon. So you're going to be getting another call, Michelle, and we're going to have another pre-qualified buyer
I
out there
appreciate
on
that.
the streets looking for a home. So
That's awesome,
it's
Vikki.
awesome to
Thank
work
you.
with you, Michelle.
Well, and
You
isn't
guys
that the
too.
truth?
Appreciate your clients.
Yeah, and I mean, like Vikki was saying, when it comes to rents out there, they're getting astronomical. So I know a lot of my friends are finally starting to get into the home buying process because they're realizing, hey, I'm spending, $2,000 a month, and when I could reach out to a lender and make my payment much less, I get more space generally than say an apartment or a studio, and it's been very exciting. I'm definitely happy to help my friends and all of the first-time home buyers really get their needs met.
Josh, to that point, and to Vikki, I was looking at a report yesterday, and rents have gone up in Maricopa County so fast. So 15 to 1,800 square foot home would be renting for about $2,100 a month.
Hmm.
That home, if you put that home on the market, and there are a lot of things that would play into this, but that's about a $300,000 to $350,000 home. And if you bought that, and I just did some really quick numbers on this, Michelle, and I'm not a lender, but I just did some quick numbers, and so if you rent it $2,100, but what I did is I came up with, if you buy it with today's rates, maybe $1,200 to $1,300. So
Right, absolutely. Yes.
so
I would say
that
no
is
more than 15 on the high end.
exactly, so on the high end of 1,500. But I'm telling you what, so if you bought that house, you could be saving $600 a month and have home ownership. And Josh, what is the fastest way to build wealth?
Through residential real estate.
Home ownership. That's
We taught
exactly
him
right.
well. We taught him well.
Well, I've been in my house for 2.5 years now, which is crazy. It's flown by, but it's just astounding to see the equity go up and up and up each month. And I mean, one day I'll have to tap into that and buy another rental. I know, Michelle, you've helped me and others in the rental market itself, so I'll be reaching out to you then as well.
Awesome. Thanks, Josh. Yes.
Hey,
The thing
Michelle,
is with not wasting money on rent, you're paying yourself equity.
that is
Mhm.
so true. So Michelle, why do you love working at Nexa Mortgage? What are some of the benefits for you working there?
You know what? It's that we're a broker. We're set up with over 50 different lenders. And I've spent time working for the big banks, and they have so many overlays, Carol. I just had somebody call me last week that's in a purchase with a big bank, and they didn't end up qualifying because they supposedly made too much money. But I have products that match that with a better rate, and now these people have me in a crunch to close in 2 weeks, and we're getting it done. Appraisal's done. We're just waiting to get the loan documents out. Because with the big banks, they have a lot more overlays on the guidelines. With Nexa, I don't have that. So I feel that I can close more deals and help more families.
Well, one thing I appreciate about you, Michelle, is you're learning based, and we're learning based at the Carol Royce team. And we research and we get the numbers for our listeners every week here on the Carol Royce Real Estate Show. And what I love when I'm talking with you, you'll say, I just took a class from this particular bank, or I'm in training for this loan program. So you're constantly learning about what's available for our listeners out there and their friends and family. And I just want to thank you for that. Because of that, you're able to save them so much money and put them in the right loan. And you're not just a bank where you go, everybody goes into this one box.
Right. We have different boxes. Like, we don't just have certain boxes. We can do, you know what, if you have poor credit, whatever your circumstances are, we can look into it and try to fit you into some sort of product.
Yeah, that's really great. And so you do the FHA loans, correct?
Right. FHA, VA,
VA.
conventional.
That's right. So
We do what's called non-conforming.
So if you are a vet and you want to buy a house, maybe you need to get your home sold. Maybe you're upsizing or downsizing. And you owe it to yourself to give Michelle over at Nexa Mortgage a call, because the rates are so affordable. And Michelle and the Carol Royce team, we love dealing with our veterans, right, Josh?
We do.
So anything we can do to help you, we are here to service you, because you serviced our country. You sacrificed for this great country that we call the United States of America, and we are willing to pay that forward and give back. Right, Vikki?
Absolutely.
So, hey, we're about to go to break. Michelle, come back, because I do want to talk with you just a little bit about trends that you are seeing for the year 2020. So we're about to go to break. So, Vikki, take us out. And Michelle, can you come back?
Sure will.
All right, Michelle's going to hang with us.
You are listening to the Carol Royce Real Estate Show right here on 550 KFYI. We're here every Sunday afternoon from 2 to 3 p.m. Remember, your home sold, guaranteed, or Carol will buy it for cash. Pick up the phone. Give Carol a call today, 480-776-5231. She'd love to hear from you. When we come back after this short break, we're going to continue talking about our local Arizona real estate markets.
Welcome back, everybody. This is Carol Royce. I'm your host here every Sunday afternoon. And, of course, I'm in the studio with my partner, Vikki Royce Middlebrook. Vikki, hello.
Hello. It's an awesome Sunday afternoon.
It's a beautiful Sunday afternoon. Hey, it's beautiful because where are we? We are in Phoenix, Arizona.
That we are.
The sunshine capital of the world.
I always say that we have two seasons here, hot and nice, and we're currently in nice, so I'm here for it.
That's right. Hey, listen, we had Michelle Rule with Nexa Mortgage, and Michelle is still in the studio with us. And Michelle, are you there?
I am. I'm here.
Hey, Michelle, I
everybody.
just wanted to talk a little bit about what you're seeing and what you're hearing. So we're finishing up with December. We're heading into January. What are you seeing as a trend coming out of the Feds? Our interest rates, in your opinion, that's all we have is our opinion, right, Vikki?
That's right.
We can never say anything for certain. Do you think interest rates are going to stay pretty stable for the next 30 to 60 days?
Yeah, I think they're going to stay stable for at least 6 to 8 months, I would say.
6 to 8 months. Okay, that's
see
far
anything
longer
for
than I
them.
suggested. Yeah, go ahead.
Oh, I'm sorry. I don't see anything why they would go up at this point, but at least for sure, like you said, the next 30 to 60 days, I don't think they're going to go up. They're going to remain steady. And like I said, it's my opinion, and right now is a good time to buy or refinance. Take advantage of it while it's low.
Absolutely. So, Michelle, I'm an investor and I have rental houses as well as my primary residence. If I wanted to refinance my rental houses, am I still going to get a pretty favorable rate?
Absolutely.
Well, that's good.
Absolutely. I mean, you probably won't get in the low twos or in the twos, but definitely you're going to get a really good rate depending on where you're at right now with it, because those rates also go down as well.
All right. And so I've paid down. So a lot of people don't want to refinance, Michelle. And let's just kind of talk about this, because they say, well, listen, I've had this loan for 10 to 12 years, and I don't want to go back to that 30-year. What would your answer be to that concern?
Okay, so the lower the term, obviously the lower the rate. And so what I would advise the person is if you only have 10 or 15 years left, you might want to look at, I have the opportunity, with my lender that I use, with several of my lenders, let's say you want to do an 8-year term. I can name the term. I'm not like just have 30, 20, 15, and 10. We can name the term, and then we do the numbers. And if it saves you money, then you go ahead and refinance. We don't always have to start the whole clock over.
Well, when Josh refinanced this year, Josh had already had his home for 2 years, didn't want to lose that 2 years he'd paid down, so he did a 28-year 28-year mortgage versus a 30, right, Michelle and Josh?
That's right. We can name the term.
Yeah, I know that when I told all my friends about it, they're like, we didn't even know that was an option. We thought it was 30 and 15, and that's all you get. So that was an awesome program for me.
So I love that, Michelle. So on my rental properties, which I've had for 12 to 15 years, if I wanted to refinance them, I could do, if I wanted to, a 10-year term or an 8-year term.
Right.
I love that. I love that.
Or 9-year, whatever you name the term. We look at the payment, and oftentimes the rate is different on each one of those, because like most lenders will have your rate 3.25, 3.5, all by an eighth. I can get you like a 2.764, like whatever that term. Sometimes by taking it down an extra year, makes your rate better.
Wow.
Oh, this is really great news, because for those of you that have rentals and you're seeing that rents are up, but your interest rate is also up, you could take advantage of both. You could capture the high rental rate that we have right now, Vikki, but they could also refinance with Michelle for name the years. I hear that kind of the name game, so that you can name the number of years you want, and my golly, you could walk away. I'm just going to throw some crazy numbers out. Josh, you could walk away with an extra $200, $300, $400, $500 in your pocket, maybe more. Is that right, Michelle?
That's exactly right.
I know that's what happened in the case of me and with Michelle. I mean, we looked at every single scenario. We ran the numbers at 30, at 28, different rates, and really found the plan that worked best. And I've been more than happy. Just, having that extra money in my pocket every month does make a difference.
Michelle, I know people are sitting out there going with their little pencils and calculators going, I need to talk to Michelle. I need to talk to Michelle. Honey, let's call Michelle. What is the best number for them to call you?
Absolutely. 480-620-4896.
And if you
Anytime,
don't,
call me.
yeah, and hey, if you don't remember that or didn't get that written down, Vikki, what's the next best thing?
You can call the Carol Race Team direct at 480-776-5231. That's 480-776-5231. And we can share all of Michelle's contact information with you so you can be on the path to saving some money or getting pre-qualified for a new loan.
So there's no reason, absolutely no reason, not to take advantage of the low interest rates and the rise in rents.
I wouldn't. I mean, it costs you nothing to reach out to Michelle.
The other thing, and Michelle, we just love you for that. We love you for your knowledge, and we love you for the fact that you have so much flexibility in where you can place these loans.
That's right, and I love doing it. I love being partners with the Carol Royce team.
So the other thing too, Michelle, is I recently had somebody reach out to me and they said, I don't think my credit is worthy enough of buying a house. And I said, you owe it to yourself to contact Michelle, because Michelle does have, she can, when she pulls your credit, she can also look into credit repair. And I explained to this person that your credit might be fine to buy a house today, or Michelle might just have you do a couple things over the next 30, 60 days that would raise your score to where you can get a loan and feel comfortable with your interest rate and the loan program that you're doing. So that's what I love about you, Michelle, is that you're able to give so many different options to the consumer, and you're not just stuck by saying, no, sorry, can't do the loan. You find solutions and ways.
That's right. We'll put you on an action plan, and if there's repair that needs done, we work together. Like we said before, stay in communication and get you to the goal of having your own home.
And home ownership is really something that is the American dream, and it is possible that many of you could be owning that home instead of enriching your landlords. I'm a landlord, and I love it when my tenants enrich me, Josh, when they make my mortgage payment, plus give me a little extra. So I just love that part of real estate. But if you are listening to us and you've got a rental, this is a great way for you to put a little more money in your pocket. Or if you wanted to buy a rental, it's a good time to be an investor.
Yeah, I've worked with Michelle again with investors to make sure that they can find the property that they're looking for, whether it's in the city they currently live in or it can be somewhere else within the state. I'll run the numbers to make sure kind of where those rents are looking at, and Michelle does all the rest, and we can get these houses closed, and you can get a tenant right in pretty easily. We've got all sorts of resources for that if you need additional, but I know Michelle and I helped Gene, and he's been through the moon saying that soon he's going to have to do it again because he's made so much with the current tenant in place, and it was such an easy process for him.
And Michelle, do you have loans for people that want to do vacation rentals? That's really popular here, and we're in season for those. And I know a lot of folks are wanting to jump into that game as well.
Yes, absolutely. Like VRBOs and
Yes,
whatnot, we
correct.
can do those as well.
Yeah, so there's all different kinds of options, whether you're buying your first home, you're buying a luxury home, you're buying a vacation rental home, an investment property. Michelle can help you with that loan. So reach out to Michelle over at Nexa Mortgage today. And what's the best number, Michelle?
480-620-4896.
And hey, everybody, I just want to say to our listeners, hang out with us. Because you know what we're all about, Josh and Vikki? We're all about creating wealth for our listeners. We're all about helping you find ways to create wealth. And there are many, many ways you can do that. You can do that through your primary residence, your home ownership, buying a rental property, buying a vacation rental, which is an Airbnb or a VRBO. There are a lot of different ways, right, Josh?
There are, and I'm a little blessed. I've had you in my life as a role model when it comes to rentals and the whole landlord aspect. I know that you tend to buy things closer to, say, Intel, and you have steady tenants who live in them. We've had Dave Jenks on the show who really breaks down how you can tap into the equity and when the next time to buy further rentals is. So I look forward to being a landlord myself and building wealth.
So, Vikki, what does Dave Jenks say? If you've got X number of percentage of equity in your home, you can take out a percentage of that equity and go buy a rental property. Do you know what those numbers are off the top of your head?
I think you can take cash out up to 80%, Carol, on your primary residence right now.
Yeah. I think Dave Jenks told us, Michelle, that if you've got
40 to 60% equity
in your home,
yes,
you can take a portion of that out and go buy another home. And he teaches us that is a smart way to do it. So anyway, if you want to know more about creating wealth, growing wealth, just pick up the phone, call me, Carol Royce, 480-776-5231, and I'm happy to talk with you. Josh or Vikki are happy to talk with you. We'd love to put you in charge with Michelle Rule over at Nexa Mortgage. Nexa is a preferred lender for the Carol Royce team, and we can meet with you over the telephone, on a Zoom call, or in person, whatever you're comfortable with, and we can show you how you can increase your wealth through the ownership of residential real estate. And Michelle, we're a great team.
That's right. I agree. Very amazing team. You guys have helped a lot of investors that you've referred to me that are buying, multiple homes now.
And that is one of the fastest way to increase your wealth. Vikki?
Absolutely. You are listening to the Carol Royce Real Estate Show right here on 550 KFYI. We're here every Sunday afternoon from 2 to 3 p.m. We've been talking with Michelle Rule over at Nexa Mortgage. Reach out to Carol today, 480-776-5231. We can give you her contact information so you can get on the right path to homeownership or building wealth in real estate through doing a loan. When we come back after the short break, we'll talk about our Arizona market.